What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is July 28th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I just want to have a one-on-one conversation with you guys, not only on Bitcoin, altcoins, and the broader crypto market, but really speak to you guys about the broad macro perspective. Because for the first time in a couple months since we've had one of these one-on-one conversation videos, I'm really feeling right now that the music has stopped, essentially, and that a lot of the things that I hadn't seen that kept me from getting ultra bearish on the market are now starting to come into play. And I try to maintain a biased view on everything. I always start from ground zero when I'm analyzing Bitcoin and altcoins and trying to understand where we're heading. But to be honest with you guys, not only are things starting to stagnate on the optimistic side, but outside of that as well, we are starting to see some signs that many people just simply aren't watching. And they are signs that I've been waiting to see for some time that are finally playing out, which lead us to be more bearish here in the near term, more than over the last couple of months. If you guys like this video, whether you agree or disagree, in order to get that kind of balanced view between all the sea of optimism out there, if you happen to enjoy our content here, consider dropping a like. It's one of the greatest ways you can support the channel. And let's go ahead and kick off the rambling here. Now, I want to start here just to give you guys some context in case you don't watch every video that comes out here on the channel, to talk a little bit about where we stand on Bitcoin. Bitcoin has been generally stagnating here in this channel of resistance between 28 to 32K. This was the same price range where we saw general support from buyers in the last cycle, which has now flipped as resistance since it broke in June of 2022. Along with that as well, as we saw price start to accumulate and we saw buyers come in here from this range between June to November, this descending channel of potential support, which also takes into play some of the buying in June of 2021, we started a new short-term channel here, potentially long-term channel as well. We're going to keep open to that, where essentially we have higher lows and higher highs, and we've been trending upwards since around October to November, since the collapse of FTX. This has generally been where the bulls have been feeling some strength. And again, as we take a look at our momentum indicator here on the weekly, bulls are in charge right now. There's no doubt about that, right? Bitcoin is still continuing to maintain the optimistic trend. However, we are getting just couple $100 away from that trend flip on our indicator. Not to mention, we are getting very close to stepping out of that resistance channel, proving yet again that this is a supply zone, i.e. that it is resistance, not new support. And if we do not hold on this ascending channel here and break out of this long-term resistance band and our momentum indicator flips red, we essentially are predicting that we are going to revisit this long-term descending channel of accumulation. And that is likely going to mean that there is a chance sometime before the end of this year or into Q1 of 2024 that we are going to get a third lower level for Bitcoin. I know it sounds like a wildcard prediction. I know many people out there would say that I'm being too bearish on this. But when we start to step out of our kind of micro perspective on crypto and we look into the macro perspective, things start to become abundantly clear that the things that many people have chosen to ignore are unfortunately coming into reality, and they are going to have massive ramifications, not just on crypto, but on stocks and the broader asset markets as a whole. Let's go ahead and spend some time to talk about that. Now, generally speaking, if you take a look here first at the VIX has been on a downtrend since back in October, here towards where we are here in July. So coming up here on more than half a year here, a good period of time, where generally speaking, equities have been able to have this graceful period. They've been leading forward, and volatility, of course, as it works in an inverse fashion in most cases, has been continuing to decline. And yes, it did break here essentially the long-term line of buildup of support for volatility, which we discussed many times. However, over the past month and a half, volatility has been flatlining. And I want to bring people's attention here to the fact that this is exactly where we were in January of 2022 before the COVID crash here that led us all the way up here towards the 80-point range. It's a similar range to where we were in June of 2021. And it is much lower here than where we were during the past period of time, during the kind of November 2021 range where we actually topped in equities last time. So volatility is incredibly low right now. And I understand a lot of people would generally point that to being a good thing, but we are preparing for the outward trend in the next couple of months because volatility does not remain low for very long. Eventually, something moves markets. And when volatility is incredibly low, that is actually a sign when it gets to exacerbated levels, when it gets to levels we have not seen for a long period of time, that is usually the time to start preparing for some kind of move, whether it be a 10, 15, 20% correction or a much bigger correction depending on what breaks or what has markets concerned, we generally see this as a counter indicator. And essentially, we are expecting that if we get a substantial breakaway from the support range, or if we don't continue moving lower soon, the markets are going to realize that the direction to the upside is over, that the trend is dying out. Now, this is one concern here, right? We've also as well got the Dixie, the dollar index, right? Which we're predicting here within the Dash report is going to hit somewhere around 106 here in the near term. Not setting new highs. That's at least not what we're calling for now. But we think that that's going to be the next short-term level for the dollar. And essentially, when a lot of people have been getting bearish on the dollar, a lot of people are going short off this big move here in July, we have been basically creeping back up and engulfing any of those losses and are looking here like we're going to catapult and potentially see this as a deviation to kick back up here towards 106. So the dollar here is signaling some pretty strong resilience at this range when it should be, generally speaking, as a lot of people are calling for, it should be cratering down here. We should be essentially seeing that if the Fed has done its job, that inflation is over, this should be starting to collapse much lower. And as we can see, generally speaking, the Dixie does not remain in this range for very long. It's usually up here during its peak, blow off top, and then it usually starts to crash down. However, there is a lot of resilience here. A lot of weight here that has been keeping up prices here between this channel 100 to 103.8. These are not the things I'm really concerned about, guys. These are some of the kind of small echoes that got me a little bit concerned, at least showcasing that it's not a slam dunk guarantee that inflation is over and that the Fed has won and that assets can just go back to doing what they did before. But the next chart I'm going to show you is the big one. It is one that I just simply don't think many people are covering because they don't cover it as a market to trade. And also outside of that as well, it's not as exciting as talking about the latest, greatest altcoin, right? Today we're going to be talking about oil because oil finally did something very big this week. And it is looking like, as of today, if things close where they are, if we get a close today by Friday at current price levels, or generally within that range, we have done something for the first time that oil has not seen in multiple months, coming up here in over a year. And that is oil finally clearing through either the 200-day moving average or the 200-week moving average. Now, I want to spend some time to talk about the significance of this. Moving averages sometimes, whether it be the daily and the weekly here, can create a coiling effect to basically leave markets in limbo and try to figure out what trend direction is going to take charge. Is it going to be the bulls continuing to push prices higher or the bears? Or essentially speaking, are prices going higher and lower, right? I don't want to dramatize it too much. I don't want to overcomplicate it with too much lingo and language. Essentially speaking, since back in March and February 2022, oil conducted a double top, and many people saw this as the final leg up for oil, where essentially it was a slam dunk guarantee that oil was going to continue going down, and that essentially because oil was going down and its huge ramifications on the cost of goods and services for so many industries, that inflation was slowly going to go down over time, right? That was the general narrative. Well, we talked about for months here on the channel that as it became apparent that the 200-week and 200-day were the effective resistance and support for price, that we were not going to be so certain of its trend direction until we got a weekly close above one of these moving averages. And folks, while it was looking very clear here, again, I have to say, I've been on the sidelines here. As you guys know, I've been generally here in cash. We've been of a bearish narrative here. I will be honest in saying that, to be honest, the argument for oil going higher and higher was looking weaker and weaker. I will say that candidly here. And I felt very much that we were going to be on the wrong side of the position here because there were many weeks where we weren't testing the 200-day. We had some maybe here and some back here in kind of September and October. But generally speaking, we were coming down here and testing the 200-week SMA multiple times with some substantial follow-through. But unfortunately, every single time, we could not get a close below that 200-week. Doesn't matter if we wick below that range. It's a matter of whether or not we get a substantial close. And we hold below that 200-week. Instead, we have gotten for the first time after multiple green weeks, after already 4 positive green weeks here, we've gotten a 5th green week of price action blowing well beyond the 200-day. And if that closes here, if we do not come down to say $77 here, I think this is going to give a clear trend determination that oil is going back up to 3 figures. It's going up to $100 a barrel, potentially even more. And this is, again, I want to talk here about something really, important. A lot of people have said, oh, the soft landing theory is at play here. Inflation, maybe maybe oil goes up here to 83, it goes up to $90, but it's going to roll back over. And inflation is going to be done and dealt with here. And because of that, we can just return to normal. Everything's going to be good, and the Fed can continue printing just like it was over the last decade. It's going to be the good times again, right? Everything's just going to be great again. And we're just going to continue accelerating as we have over the last decade. Folks, I got to tell you something. If oil comes back up here again and gets a bid, those inflation numbers that people are betting on are going to start to revert. And the Fed's going to have to come in more aggressively. And the longer that the Fed kicks the can down the road, as we've talked about for the past year, the longer the Fed kicks the can down the road and doesn't accelerate, instead of 25 basis points by 50 basis points, it is going to be more pain to come because something will eventually break. If they're fast and aggressive about it early on, demand slows, inflation could be dealt with, things will be much better. But unfortunately, there's still too much money in the system. And if you think that, we can essentially just ignore what's going on in equity markets and in crypto as a sign that there isn't still too much money in the system, right? Like that just asset prices with no real substantial improvement in fundamentals from their financials back in November of 2021 when they previously topped, right? We're approaching those valuations. Many of the FANG stocks or technology companies have blown to new all-time highs already. Are they really in better growth positions than they were before? Are they still perceived as the growth stocks they were seen over the last decade, where people justify paying much higher priced earnings multiples? Because if they aren't, what we are seeing here is a symptom that the Fed still has a long way to go in its tightening efforts. And I'm not just talking about interest rates, I'm talking about the balance sheet. I gotta tell you guys, this to me is quite concerning how people have chosen to ignore this here, right? The fact that we are still tightening on the balance sheet here, that we have got a long way to go before we either close out the secondary wave of stimulus from COVID in June of 2020, another $1.1 trillion until we get to that point. And if we even just cut down on half of the stimulus from that point in February of 2020, taking us to essentially, right, from a peak of 9 trillion towards around, roughly speaking, I would say about 6.5 trillion, somewhere in that ballpark. We've got a long way to go. A really long way to go. I think the sheer fact here that people are starting to ignore is simply how many people pointed towards the fact that, because of this money printing, asset prices massively appreciated. No doubt about that. I think we all would agree with that. But that we can just simply ignore that by rolling off this money supply, that it's not going to affect asset prices and their long-term trend, let alone if the Fed continues to do nothing, that inflation can still stay below 2%. I mean, are we kidding ourselves? We more than doubled the money supply. We still have more than double the money supply out there in circulation. And we wonder why we're seeing the relief rallies we're seeing. Of course, it's a symptom that the Fed has not done enough yet, that central banks have not done enough yet. We have not learned our lesson, and essentially, supply and demand equilibrium have not come into balance yet. This is the key point, guys, we are driving here. I know it can be painful sometimes when you see these moves in the market, but I gotta tell you guys, I ask one fundamental question, and that's whether or not we've got the legs to continue moving forward. Because right now, Ethereum is still not getting a bid against Bitcoin, has been maintaining a red flip here in our monthly momentum indicator since the start of the year. And we still think that Ethereum is going to come down in this range here, make another 25% move downward against Bitcoin. Altcoins as a whole are still setting in lower highs and lower lows. They cannot catch a bid. And stablecoin liquidity is still rolling off. But I come back here to the most important chart we've discussed today, guys. which is the price of oil. This is the biggest monthly move, over 13%, that we've seen in oil. And if this starts to kick back up, it doesn't really start to just kind of deviate, turn back down, and go down below that 200 week. The Fed hasn't done its job. You can point your fingers to whoever, the Biden administration, whoever, right? I'm not here to be political, but the West has not done its job. It has not gotten oil down enough. And if oil starts turning back up, if there are more cuts to production, prices will start to churn back higher. Inflation will respark, and the Fed, unfortunately, after already hiking rates as high as they have, are going to have to go higher. They're going to have to roll off more of the balance sheet. They're going to have to reduce the money supply effectively, unless they want to really, lose all of the progress they made. Inflation itself, a lot of the times, is determined by perception, right? Jerome Powell actually speaks about this many times in the FOMC meetings, that a lot of inflation itself can be a monetary effect, but outside of this, there's a secondary effect where people start feeling FOMO, they start spending their money because they feel like it's not going to be worth much tomorrow. If the Fed does not address it now, that secondary effect on inflation is going to come roaring back. And it has been doing that every single time they pivot or pause. Do you guys remember maybe even like a month or two ago since the last FOMC meeting, so many people said the Fed never pauses on rate hikes and continues accelerating. Well, they just did, another 25 basis points. And in fact, that's actually a lie. There are many times in the past where the Fed has done that, where they've paused on interest rates and continued accelerating. Look no further than the inflation wave of the 70s, where they even declined interest rates because they got ahead of themselves. They didn't get ahead of inflation. They got on the idea that they need to appease the markets, that they're being too tight on the markets. When right now, with mortgage rates being at around 7 to 8% in the United States, people are still buying up homes. And it's not because people are going out and taking mortgages. It's not because your average Joe and Jane are going out there and taking a mortgage at these rates. It's because there's an awash of cash in the system where people are paying in cash for the value of current properties, which shows just how ridiculous, how much money there is in the system. And that inflation we think is gone and done with can come roaring back. I say this with so much passion, guys, not because I feel that you may disagree with me. I say it with so much passion because as a friend, there are too many people out there telling you it's a slam dunk, that it's done and over with. And I gotta be honest with you guys, it just doesn't feel that way. It does not feel that way. So, I rambled on a good amount here, guys. There are two things I'm going to ask you about. First off, if you enjoyed this video, whether you like it or whether you disagree with me, but you appreciate the content and the perspective, I ask you guys to consider dropping a like on the video. But outside of that as well, you guys can definitely consider checking out the Dash Report. We put out a really solid article. We're going to be shipping it out here on the 1st of next month. It'll be coming out in a couple days. But essentially, I'm working on the newsletter now, finishing it up. And we put together, I think, what may be a really compelling article that talks about one of the key dynamics that drives bull markets. We talked, maybe hinted towards it a little bit today. It doesn't have to do with oil more particularly, but it has to do with this topic of the money supply. And I want to spend some time again in this article to really drill through and talk about the historic significance of this. And when markets become detached, the pain can come roaring back into the market. So, anyways, guys, don't mean to sound too negative here. Just trying to let you guys know how I see it here. At the end of the day, I'm a pragmatic optimist long term. I do believe the number goes up and to the right. I do believe that there will be our day when assets start to move higher. But I got to tell you guys, with the stagnation we're seeing here in Bitcoin, the inability to clear through this range tells me that there are more sellers than buyers here. And that the bid that is going to set in the bottom for this market has yet to come in my opinion. But it's just my take. At the end of the day, take it with a grain of salt like everything else you hear out there, guys. If you can, consider dropping a like on the video. I hope you guys have a wonderful weekend, where I'll see you guys on Monday during our next video. Take care, everyone, and have a wonderful weekend.